Hello students, today we are going to start our new chapter, that is Accounting for Goods and Service Tax GST. It is very important chapter because GST is introduced in recent year. All you know about the GST, it is an indirect tax. So now we discuss in this chapter the meaning of GST, tax merged into GST, GST rate structure, objectives of GST, types of taxes under GST, and accounting procedure. So in this whole chapter, the accounting procedure, it is very important, and rest is not that important, but you have to focus on accounting procedure of GST. So first of all, what is GST? So goods and service tax, that is GST, it is an indirect tax which is imposed at a prescribed rate on the every supply of goods and services except on petroleum and alcohol for the human consumption. Okay, so first of all, there is a very important term, that is indirect tax. So there are two types of taxes. First of all, direct tax and indirect tax. Okay, so direct tax are those tax which impact an incident or lie on the same person. Okay, it means it have to paid by this person on which this tax is imposed. But in indirect tax, the impact and incident both lie in different persons. Okay? So, the direct tax is to be paid by the person on which it is imposed, and indirect tax are distributed or charged from different person whosoever use the services and goods. It is based on the principle of one nation, one tax. In the previous years, the rate of tax is different to different states, but now every indirect tax rate is equal in every state. Okay? So, it is introduced on 24th March 2017 and imposed or come into effect at 1st July 2017. There are many taxes which are merged together and become a GST, like the central and state government both impose indirect taxes. So central level taxes are excise duty, service tax, and central sales tax. Now it has become CGST, Central Goods and Service Tax. Okay? Central Goods and Service Tax. Now, there are state level GST, that is octroi and entry tax, when the goods are passed through the boundary of states. This type of tax is imposed. Purchase tax, entertainment tax, value added tax, that is called VAT, luxury tax, and tax on lottery. These taxes are merged together and become SGST, state level tax GST. Okay? Now, the rate of GST is different to different slabs, or we can say that different to different on goods and services, which is divided into 5 slabs. First of all, essential items including food impose 0% tax, which is quite good. Common use item is 5%. Standard rate is 12%. And the maximum goods and service standard rate is 18%. And on luxury item and tobaccos is 28%. Okay. Now, whatever tax is paid on purchase of goods and services and it is collected from customer on the sales of goods and service, it is called input GST. Okay, and it can be set off from output GST when you sell some good and you collected it from customer, then it is called output GST. Okay. As such, GST paid on purchase, it is input GST, is not a cost for the purchaser but is an asset since it can be set off against GST collected on sales. Okay. So, input GST is treated as a asset and output GST is treated as a liability or expense. Okay. So now we came to the conclusion. When a person purchase goods from another person, it is customer and seller. Suppose you are customer and you purchased it from seller, then you pay input GST. Input GST. When a person purchased good and paid GST on purchased good, that is called input GST. Okay, that is called input GST. Now, if a person is treated as a seller and it collect GST from its customer, then it is called output GST. Okay, then it is called output GST, right? Input GST. Input GST is treated as asset and output GST is treated as liability, right? Okay. Now, what are the characteristics of goods and service tax? GST is a comprehensive indirect tax. What is comprehensive? It replaces all the indirect taxes which are imposed by central and state government and unified them. Like there are so many indirect taxes as we studied in previous pages, like luxury tax, and there are service tax, central sales tax, excise duty, etc. are unified and treated as a unified tax, that is GST. Okay. Uniform GST rate. The rate of GST are uniform across all the states and union territories. That is very good. GST paid is not a cost. GST paid on purchase of goods and services, that is input GST. As I tell that input GST is treated as an asset. So it is not a cost for purchaser but is an asset because it can be set off against GST collected. It can be set off from output GST, which is collected by us from our customer. Okay? GST is value added tax. Okay, GST is value added tax which is paid off against GST collected. Okay, here is a example. A purchase goods for 1 lakh and sell the same to B for 1,50,000 and the GST rate is 12% in such case. GST paid by A on purchase is 12%, that is 12,000. GST collected by A from B on sales, that is 18,000, 1,50,000, 12%, that is 18,000. And you can set off from it. How you can set off? You collected 18,000 and you paid 12,000. So you can deduct 12,000 from 18,000. Okay, that is, you have to pay only 6,000 in government's account, right? Quite easy. Okay, now adjustment of IGST, CGST and SGST. Okay, so first of all we should understand what is IGST, what is SGST, what is CGST. As you know, the different tax rate is imposed on goods and services. Like if there is 18% GST is imposed on goods, so it is divided in 9% as a CGST and 9% as a SGST. Okay, CGST and SGST, right? Now, what is CGST and SGST? When suppose a person sell goods in UP only, so whatever tax is imposed, suppose 18% tax is imposed, then it will be treated as CGST and SGST. Okay, central GST and state GST. But if the same person sell goods outside from the UP, suppose from UP to Bihar, okay, so CGST and SGST is treated as IGST, that is integrated GST, as 18%, and it will be deducted or divided in government treasury. Okay, so if you trade within the boundary of your states, then it will divide it into CGST and SGST, but if you trade beyond your state, then it will treat it as a IGST. Okay, so this is the concept of GST. Okay, if input GST exceed output GST, what is input GST? When we pay GST on purchase, then it is called IGST, and when we collect GST from our customer, then it is treated as output GST. Okay, so how you treat them? You can treat them output GST debit, that is CGST, output SGST debit, and to input IGST. Okay, quite simple. It is not that tough. You have to remember that output GST is liability and input GST is asset. Okay, we can solve them in illustration 6 and 7. Okay. Now, there are so many journal entries according to GST. Okay. So, first is for the purchase of fixed asset debit. You purchase fixed asset, that is why you have to pay input GST. Okay, we have purchased something, so you have to pay input GST, which is divided into CGST, central GST, state GST to bank. If you pay through bank, it will be credited. For expenses are debited. All the expenses are losses are debited. You know the rule. So expense account debit, input GST account debit, inputs SGST account debit to bank. Okay. For the income, if you receive income, for example, commission receive, so bank account debit to commission receive to output GST because you received, okay, from outsiders, output GST and output SGST. For goods withdrawn by the proprietor for personal use, that personal use is drawing, so entry will be drawing account is debited because it is expenses, to purchase account because goods are withdrawn from the business, so purchase account credited, input GST credited and input SGST is credited. Okay. For goods given as a free sample, as you know, these are the special entries. You have to only remember whether it is input or output. If you sell something or you receive for the selling the goods and services, you receive something by the business, that is called output GST. But if it is not received from outside, it is done within the business or you paid for it, then it will be input GST. So it is quite simple. You can easily solve them. Okay. For setting off input SGST against output SGST, output SGST to input SGST, setting off, you can deduct the input GST from output GST, what you receive and what you have paid you can set off, and that amount will be treated as a asset. For the payment of GST, output CGST, you have to pay the GST which is collected by the customer, output SGST account debit to bank because it is deposited into the government account. Okay. There are many other entries which we can see here. In case of interstate supply of goods and services within the same state, what will be the entry? For the purchase of good, purchase account debit, input CGST, input SGST to bank. For sales of good, bank account debit or debtors account debit, because if you sell the goods in credit, then debtors account is debited. To sales, output GST because you have sold the goods, so you collected GST from customer, that is output GST to output SGST. For the purchase return, you got the return, so this entry will be reversed. Creditors account to purchase return account to input GST to input SGST. Actually this account because you purchase, it is a purchase return. So this entry will be reverse. As you see, creditor's account is credit. Now here is creditor account is debit. For sales return, if you sell the goods and the customer return that good, then it is sales return account debited, output CGST, output SGST to debtors. Quite simple. Now this is the first question of your practical from DK Goel. The first question says that pass the entry in the book of Mukherjee and Sons, assuming all the transactions have taken place within the state of Uttar Pradesh. Okay, so it is interstate transactions. Assume CGST and SGST is 9%. Both are 9%. So purchase of goods for 5 lakh from Mehta Brothers. Okay, you have to calculate Mehta Brothers purchase good for 5 lakh. You have to calculate GST. How you can calculate 9% GST? That is 9 into 5 lakh upon 100. So 9 5 ja 45. That is 45,000. So CGST and SGST both are 45,000, right? So what will be the journal entry? Here is the journal entry. Purchase account debit, because you have purchased the goods, so input CGST is 45,000, input SGST is 45,000, and to Mehta Brothers, because you purchase in credit, that is 5,90,000. Okay. Now, sold goods for 8 lakh to Manjul and company. So what will be the journal entry? Manjul company account debit, that is 9,44,000, to sales account 8 lakh, and the GST you know 9%. So here you sell the goods, then you have to credit output GST. So output CGST is 72 and output SGST is also 72,000. Okay. Paid for advertisement. Paid for advertisement for 40,000 by check. So advertisement account debit, because you have paid, so input GST is charged, that is 3,600, and in SGST is 3,600. To bank, that is 47,200. Okay. Purchase furniture for office use, that is 50,000, and payment made by check. Okay. So furniture is 50,000 because you have paid. So input GST is charged, that is input CGST according to 9% is 4,500, and according to that 9% SGST is also 4,500, and to bank, because we have paid from check. Now paid for printing and stationery, that is 8,000. Okay. So printing and stationery are expenses, so it is debited. To, because you had paid, so input GST account debit to cash. Okay, quite easy. It is not that typical. Okay. Payment made for the balance amount of GST. So first of all, output GST and input GST both are set off. Okay. Output CGST is 53,820 and SGST is also 53,820 to input GST. Now you can find out the balance account, what is the balance you have left, and according to them you can Make entry output CGST is 18,180 and output SGST is also 18,180 to bank, that is 36,360. Okay, it is very easy, you can easily solve them. Okay, so in next video we solve some more question on GST. You should try some questions from DK Goel, and in next video we try to solve some more typical question which is based on GST. Okay, thank you.